So, should we buy or sell the South African rand versus the New Zealand dollar? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So, let's find the pair. So here we have it, South African rand versus the New Zealand dollar. So we have 10% here from the 52-week low, and we have seen a minus 5-ish% pullback. Okay, so let's just jump right into the charts. So these are weekly data points, very much big picture, and we can see that there's been a very fundamental trend change. So we have gone from having a very clear downtrend to now it is much more an even battle here between the bulls and the bears. So that is a pretty substantial change. And we can see here that this red 200-week moving average, like there was this long period where we didn't really test it at all in terms of resistance, but recently, like ever since February 2017, we have tested that moving average a lot, and the bulls have also tried to use it as support. The problem, however, for the bulls is that the red 200-week moving average, the bulls tried to use it as support. So they had a little bit of success here. This was a decent attempt. Tried a bit here as well, also here and here. But you can see here that the bears have really solidly reclaimed that moving average and made it their own. So now it is a very surgical resistance level, and the bears, they just sell when that level is touched. And this week we are very surgically finding resistance at that moving average, as you can see here. This is a very surgical rejection, and this is if we close like this, then that is a pretty clear signal here for the bears. From the bears to the bulls. Let's go here and look at the daily data points. So on the daily data points, we do have a bit of a complicating factor, and that is this pretty clear inverse head and shoulders pattern that is potentially developing. That is a bullish technical pattern. It is a reversal pattern. What is further beneficial to the bulls here is that we have been able to get above this red 200-day moving average in this case. The problem, however, for the bulls is that we do have very clear resistance on the weekly data points, and we also have that on the daily data points. So let me draw that in. So this black line shows price, and you see that here we have a resistance levels back here from this pullback. Here, basically the same level we are at now, and also resistance from back here. So looking years back into the past, we can see that there is resistance at this current level, and that is definitively something that complicates the situation for the bulls. Let's now look at these other indicators. So in terms of the RSI and the PPOs, we are at a high level, but we have been higher. So this is not like a perfect risk reward in terms of going bearish, given that we have been able to push higher in the past. On the daily data points, we do see that the daily RSI, it is at a very high level. The vast majority of the times where we were at this level, we did see a pullback. In terms of distance from the green 50-day moving average and the blue 100-day moving average, then we are at these very key highs that it has been beneficial for bears in the past. But we must explore further. I will, however, give the technicals here to the bears. The bulls have something, especially in terms of that inverse head and shoulders pattern, but the bears have a lot of points in their favor at the moment. When we look here at the seasonality, so to the left, I only got seasonality for the South African rand, so not the pair itself. Over the last 5 years, you can see that February usually posts a minus 1.7% loss, and there's a almost minus 3% for March, and that is a lot in the Forex market. Over the last 10 years, February usually is flat, March has a big loss, April 0.3, and then a big loss for May. So the seasonality is bearish. Over the last 20 years, then February tends to post a 1% gain, March 0.3, April is strong, May is weak. Looking here to the right, we do get, that the seasonality for the pair, average over the last 5, 7, and 10 years. In that case, you can see here that over the last 10 years, in this red line, you see that the coming time here leading into the 30th of June, it usually is bearish, meaning the South African rand tends to weaken against the New Zealand dollar. Looking here at this blue line, we do see that there is an overall bearish tendency, but not like super strong like on the longer term horizon. Looking here in the green, then we do see that there's overall a pretty clear bearish tendency here for the South African rand. So in terms of seasonality, I will give that one to the bears. Then we look at correlations. Long term, we do have minus 32% with the S&P 500, 34% with the dollar index, and 60% with the ZA, which is the South Africa stock market ETF. Then we have minus 33% with the New Zealand stock market ETF, ENZL. Daily data points, minus 73% SPY, minus 57% dollar index, then 60% positive with EZA, and then minus 1% with New Zealand. So looking both short-term and long-term, it is pretty clear that the strongest correlation we do get here, that is with this EZA, which is the South Africa stock market ETF. So let's do a quick technical analysis of EZA. The interesting thing here about the EZA is that we do here on the long-term weekly data point picture, we do have a inverse head and shoulders pattern, which is especially interesting given that we did see that on the daily data points. So this is a pattern that, it's here as well, but long-term. So that is definitively interesting. Let's explore a bit further. Let's go here to the daily data points. Yeah, I mean we have seen we've seen a very interesting move, but we are getting into a territory where we have seen rejections before. So let's see how we are doing in terms of these over extension indicators. Yeah, the RSI, PPOs. Yeah, we are at elevated levels, not like levels that are like guaranteed, to create pullbacks, but we are at levels that certainly have been more challenging for the bulls in the past. Let's just very quickly get the seasonality here for the South African stock market. Yeah, we do see that it's a bit of a rounding-ish topish pattern here across all these time frames for the seasonality. So it sort of corroborates, that bearish thesis. Here I am looking at the South African rand / the New Zealand dollar against the dollar index. And you can see here that, looking at this black price line, we do have this horizontal resistance level in play at the moment, looking, very long term. So that is definitively quite relevant. Here I am looking at it against Bitcoin. In this case, we see that there's been a fundamental trend change. So here it is, very much bearish, and then it becomes more like sideways. And here we do have it against gold. in this case, we sort of are like stuck in this price range that we have been in quite recently. So let me draw in the price box I am talking about. So you have a floor around here, and then you have that ceiling up here. So this is just a classic consolidation zone that price is almost like magnetically attracted to. Okay, I do see that we have some more time left here, so yeah, let's quickly just sum up my take here. I do think that the technicals, they favor a more bearish thesis. The seasonality corroborates it, and when we looked at the in terms of the correlations, we did have that correlation here with the South African stock market. And we do have that inverse head and shoulders pattern that is a point to the bulls, though the correlation between the currency pair and the South African stock market, it was positive, but it was not like very strong. So if we quickly just look at it, so 60% positive long term and 60% short term, that is a strong correlation, but well, it is positive, but it's sort of kind of strong. Like when I talk about a strong correlation, then I'm thinking about like 85% and upwards, because at that level, then there will be a very clear effect between the different securities. But when there's only 60%, it means that it's just slightly strong. Yeah, let's quickly just look here at it. Yeah, so I feel more bearish than bullish for the pair given the current setup. Okay, so let's now just quickly look here at gold. Yeah, so this is just bonus content. So gold here, it is trying to get above this blue 100-week moving average. It would be very good for the bulls to actually close above it this week, and we don't have that many hours left. So yes, that would be good, because then it would be like 1, 2, and 3 times that we have just been able to get above it, even though the bulls have tried, and the bears have also tried to push it down. A close above this week would really send a clear signal that the bulls are actually a bit serious about this move, and we are very close to also a horizontal breakout as well. So yeah, this looks interesting from a bullish perspective, but the bulls really need to be a bit more aggressive, because pushing a little bit higher now is the kind of thing that could be sufficient to make the bears panic a bit. In terms of silver, it is not outright bearish, but it certainly is not bullish either. The big problem here is that the blue 100-week moving average is a clear resistance level. Like if you look at this week, it was just outright surgical, and like this week here, and the current week we were rejected when we got above it. So yeah, I am bullish long term for silver, but the situation for silver is just way more messy. Now let's quickly look at the Bitcoin index as well. Okay, Bitcoin. Yeah, so we did certainly see a nice rally here. And it's a long time since we were up 3 weeks in a row. So so let's measure. Okay, so it's yeah, we have to go back 77 days to find a period where we were up 3 weeks in a row. So the current move, it is definitively impressive, and it is something that is scaring the bears, because that is a big difference. So let's look here at the daily data points as well. Yeah, we do have a nice move here, getting a little bit of a pullback as we are breaking out. This is another classic illustration of why I'm not a huge fan of breakouts, because here you have the breakout level here, and then you got like a maximum 4% gain. But from these lows here, especially this low, to this high, that is a 37, almost 38% gain. Obviously, much better. It's not really a problem for us to pull back a bit here. But we do want the green 50-day moving average here to function as support. You see that here on the 8th, it functioned as support. We are pulling back a bit today. As long as we don't close below it, then it's just fine. There's no problem really to have some pullbacks every now and then. The key thing about the pullback, if you are going to transition into like a full bull market, you do want moving averages to be support. But yeah, I don't really see a problem here. But the bulls need to protect the fort, because they have built sort of like a fort here now, with turning the 25 and the 10-day and also the 50-day to support. Losing the 5-day moving average as a support level, that's not really a big deal. But the 50-day here in green, that is a bigger deal. But yeah, overall it looks nice for Bitcoin. But as I have said many times before, the most important thing for Bitcoin is not in any way, shape or form the price itself. That's not how money works. The most important thing for any kind of currency out there is the number of transactions. That should be the focus for Bitcoin. We must increase the number of transactions in the real world. Okay, but yeah, that is a topic all unto itself. But yeah, I think that we've gone through a bunch of different types of money here in this video. Whatever you do, of course, you want to let the trend be your friend. Always use the stops. And to get access to a bunch of educational content that I can't go into on Rumble, YouTube, and the likes, then you just go here and subscribe. $19 per month is really, really cheap given what you get. And you get all of these things. There's currently 13 hours of exclusive content, and that will increase continually. And you will be able to join my professional network, so if there's something you are looking for, then I can certainly network you with people who match that. And a very key reason why I offer this, educational content here, that is because as in terms of the longer term plans for DiamondArm, creating ETFs and the likes, then I would need to have employees. And I will definitively select from those who have gone through the educational content, that understand, the logic behind the method.